Hello everyone, thanks for the introduction there, Tim. As Tim mentioned there, I'm an analyst at Integer Research. I edit the North American section of the AdBlue DEF Monitor and also discover DEF.com. And I do a lot of work on the European AdBlue market as well, so I can bring some of that experience to the product. So what I've done is I've split the presentation into three main sections. We're going to start by looking at DEF demand, so the current consumption we're seeing in the marketplace and the kind of growth that we're seeing in that demand. Secondly, we're going to look at the development of the retail network, and this is looking at everything from supply at truck stops, bulk DEF, the number of locations offering jugs, that kind of thing, and finally we're going to go on to DEF pricing trends. Okay, so if we start with DEF demand, this chart shows you the number of Class 8 trucks, SCR-equipped trucks on the road today. Now by Class 8 we mean heavy duty, and as you can see there's over 143,000 already delivered to customers and on the road today. And also this has been split by vehicle manufacturer, so you can see the kind of market share they have. A couple of points about the development of this. What we saw in the first 6 months of the market, a very slow build-up. There's a big overhang of the previous year models, and it took some time for manufacturers to work through this. So the market really started around kind of June, July. Outside of this Class 8 segment, we see about 70,000 Class 4 to 7 trucks on the road today. Okay, what we've done here is look at the market share of the Class 8 manufacturers that are using SCR. So as you know, Navistar at the moment is the only Class 8 manufacturer not to go the SCR route. Instead, they've used advanced EGR and with emissions credits. Now, the reason we've compared the second quarter of 2010 and 2011 is we believe this is the last point because of the overhang from previous year models. This is the most up-to-date point at which we can compare a pre-SCR market to an SCR market. As you can see from the slide there, the Navistar's year-on-year Navistar's market share has dropped 10%. Daimler's also lost a few percent, and the slack has been picked up primarily by PACCAR and also a little bit by Volvo. And we believe the share prices of PACCAR and Navistar reflect these market shares to some extent. Once we know the number of vehicles on the road, we can start to think about the volume that they're consuming. So what we do here is we model the volume using data from manufacturers. So we're looking at different assumptions like dosing rates, annual mileage, and different points like that. We also discuss that with fleets to see what they're seeing in real world as compared to what was predicted at the start of the market. And it's basically the model continually evolves. As you can see there, at the moment there's just over 6 million gallons of DEF being consumed every month. This covers both the US and Canada and Class 4 to 8 vehicles. We've seen quite a rapid growth curve in this consumption. So for example, between Q1 and Q2, we saw a 35% increase in consumption. This also shows you the impact of the Class 8, so the heavy duty segment on consumption. The Class 8 vehicles that are out there are consuming 91% of the DEF. At the moment, the model does not include off-road vehicles. While there is some volume going to these applications, we're looking to build these vehicles into the model at the moment. We're also in discussions about a formal production survey, which we hope to launch next year. What I've done here is take that volume, so that's 6 million gallons in August, and mapped it using diesel sales data by state. And the idea here is to kind of give us an impression of where the demand is in the US for DEF, so where we think it's being consumed. This comes with a few warnings. I think while it is a useful indicator, diesel sales aren't going to correlate exactly with DEF sales. There's a few reasons for that. The one of the primary reasons is the willingness of fleets to upgrade. So some fleets in certain areas might be willing to upgrade before others. We also think that the supply chain won't look like the diesel supply chain. It bears some similarities, but for example, in a state like Ohio, you have a high number of fleets based there. Now, if they only have to fill up once every 3 diesel fills with DEF, they might only be filling at home base, but they might be buying lots of diesel in other neighboring states, for example. So this is, again, a useful indicator, but it needs to be treated with a little bit of caution. So now we know the kind of demand that we're seeing in the market. We're going to look at the retail market, the retail network and how that's developing. The first format we're going to look at here is the bulk DEF at truck stops. So these are facilities that are open to anyone to come and pump bulk right there alongside their diesel. As you can see, we've seen again a really good network develop here. We've seen, for instance, between July and October alone, we saw a 43% increase in the number of locations offering that facility. At the moment, the impression is more that the truck stops, that the speed that they're rolling out this network is more limited by logistics and equipment than it is by a willingness. They're very keen on the market and are putting a lot of capital into it. We've modeled the end of year where we think the pump numbers will be at the end of the year, so just over 350 online. That's largely based on the end-of-year targets of the 2 main truck stops, Pilot Flying J and Loves, and we've also modeled the growth of the independents, which you can see in the gray bar at the top there. So at year end, if everything goes according to plan, Pilot will have about 51% of the locations that are online, and we'll see more and more independents coming in too. This maps those pump locations by state. So you can see a kind of focus on the East Coast. We see much more development in the retail network there. Interestingly, for the first time this issue, this is from the latest issue of the AdBlue Monitor, we've added a color for Sapbros. They've now got 9 pump locations, the same number as Travel Stores of America. This is also useful because you can kind of see how the network develops. So it focuses on the main transport hubs and obviously the main highways. So you can see, for instance, Interstate 5 in California has a whole line of locations there. You can see 95, for instance, in South Carolina, and the pattern is really easy to trace to the main freight routes. You can also see a few of the independents. So, for instance, in Oklahoma, you've got 2 Exco locations, and you can see a few more spread around the country as well. The shading of the map shows us the number of retail locations offering packaged DEF. So this could be a service center, a C-store, something like that. They'll be offering either 1 or 2.5 gallon jugs normally. And again, you see a focus on development in Texas and also in the East Coast. So Texas, for example, I think in this data set has 402 locations offering jugs. And the rollout here has been really comprehensive. The growth sustained, and we're meeting all of the last mile customers here and seeing locations across the whole map. Okay, as we went to press with the last edition of the AdBlue Monitor, we also had the first DEF pump come online in Canada. The first was on the 1st of October, and it opened in London, Ontario. Napanee, which is not too far away from the location, came online last Thursday, and Tilbury is apparently approaching commission, or may well in fact be finished by the time we're done here today. The introductory price, these are Pilot Flying J locations. The introductory price has been 0.799 Canadian dollars per litre, so 3.07 gallons per $3.07 per gallon. Now, that's obviously a lot higher than what we're seeing in the US, but the average tote price is only, in Canada, is only 10 cents lower. So it's still a very attractive format for fleets in the country. Okay, the next supply format we look at is the number of bulk installations. So these are the permanent storage installations capable of taking DEF in bulk, and it's at both fleet and truck stops. So you can see there that the installation numbers have been sustained throughout this year after a kind of seasonal lull in Q4 2010. So for instance, in Q3, the latest data we have, there's 153 new locations came online. And there you can see how the gray bar signifies bulk storage over 4,000 gallons. So you can see that it's starting to creep upwards in terms of size. And I think more interestingly, the less than 1,000 gallon storage units are becoming a lot less popular. And I mean, this is a really strong trend. So we're seeing, for instance, in Q2, the installations over 1,000 gallons made up only 29% of the total. Now in Q3, this jumps to 92%, so a really strong trend upwards there. Okay, so now we've talked a bit about the retail network. We're going to look at DEF pricing trends.